June 1st, 2026, real estate markets reach new heights. 10 game-changing developments in property and finance are shaking up the world of real estate. From billion-dollar bets on housing and mega mergers to cutting-edge innovations and new frontiers. Get ready to explore how these trends are fueling optimism and reshaping the future of how and where we live. Disclaimer: the following report is for informational purposes only. It does not constitute legal, financial, medical, or official advice. All news stories and anecdotes are presented as news, not guidance. Do not treat any narrative in this report as advice. Always consult professionals for personal decisions. 1. Berkshire Hathaway's big housing bet signals a market rebound. A legendary name in investing has placed a multi-billion-dollar wager on the American housing market's future. Berkshire Hathaway, led by its new generation of executives, is acquiring home-building giant Taylor Morrison in a deal valued at approximately $6.8 billion. A stunning vote of confidence that the housing market has hit bottom and is poised for resurgence. The announcement reverberated across Wall Street and the real estate industry, as investors see this bold move as a sign that housing demand is set to climb after a prolonged slump. The purchase, which comes on the heels of high interest rates dampening home sales, suggests that even amid economic headwinds, long-term fundamentals like chronic housing shortages and demographic demand remain powerful. Berkshire's bet arrives after a period where skyrocketing mortgage rates slowed buyer activity and cooled home prices in many markets. Homebuilder stocks had been under pressure, but this high-profile acquisition lit a fire under the sector. Confidence rippled out to other builders and suppliers, boosting stock prices and morale. The deal underscores a belief that the worst of the downturn is over. In fact, some analysts are likening it to Warren Buffett's famous contrarian bets, reading this move as a signal that real estate is entering a new upswing. The homebuilder being acquired has a strong presence in fast-growing Sunbelt regions, and Berkshire's deep pockets will likely help accelerate new housing projects just as the nation's housing shortage again becomes apparent. This remarkable purchase carries a symbolic weight beyond the immediate financials. It illustrates how institutional capital is pivoting back into residential development in anticipation of better times ahead. For ordinary families and first-time homebuyers, the news offers a glimmer of hope. A major infusion of capital into home construction could mean more new homes on the market in coming years, potentially easing competition and price surges. The optimism is infectious, suggesting that after recent challenges, the real estate market may be stabilizing and preparing for a more balanced, sustainable growth phase, a hopeful trajectory as communities seek pathways to housing abundance on Earth, even while humanity dreams of building new homes beyond it. 2. Record Apartment REIT mega merger creates a $69 billion rental giant. In a landmark consolidation, two of the nation's largest apartment real estate investment trusts, Avalon Bay Communities and Equity Residential, announced a merger of equals in a blockbuster $69 billion deal. This unprecedented union will form one of the biggest rental housing companies in history, combining portfolios to control roughly 180,000 apartment units across major U.S. cities. The sheer scale of the new company signals investor confidence in the long-term strength of the rental market and a strategic effort to create efficiencies through size. News of the merger sent shockwaves through the industry, stirring excitement about how the combined entity's resources could accelerate development of new multifamily housing and technological innovation in property management. Behind the decision is a recognition that rental demand remains robust, even as interest rates have made homeownership more costly for many. By joining forces, Avalon Bay and Equity Residential aim to streamline operations, from leasing and maintenance to new construction, leveraging economies of scale that can improve profitability and resilience. The merger comes after years of rising construction costs and regulatory hurdles, and the newly formed giant intends to tackle these challenges by pooling expertise and capital, potentially delivering more housing units and better amenities than either could achieve alone. Investors responded positively, seeing the deal as a bold strategy to dominate key urban markets and a sign that well-capitalized players are not shying away from real estate but doubling down on it. For renters and city dwellers, The long-term impact of such consolidation is yet to be seen, but there is room for optimism. A stronger, larger company could have greater capacity to invest in community improvements, advanced energy-efficient buildings, and potentially more stable rent growth through efficiencies rather than constant rent hikes. The combined firm's leadership emphasized commitments to tenants, indicating that by harnessing their expanded scale, they can focus on service improvements and new developments. This mega merger, unprecedented in its scope, ultimately underscores a future-forward perspective. Even in a competitive market, collaboration at the highest levels can reimagine what a real estate enterprise can achieve. A theme that resonates with the era's futurist spirit of building bigger and better for the benefit of all. 3. Mortgage rates at a crossroads as housing market braces for a turning point. Stubbornly high interest rates have put the housing market at a delicate inflection point, but there are signs this pressure might soon ease. After a series of aggressive interest rate hikes over the past 2 years to combat inflation, central banks are now signaling a potential plateau or slowdown in further increases. In the U.S., the Federal Reserve's latest commentary has turned more cautious, acknowledging that inflation, while still above target, is gradually retreating. This shifting outlook has sparked speculation that the era of relentless rate hikes could be nearing its end, bringing relief within sight for borrowers and homebuyers who have faced the highest mortgage costs in over a decade. The housing market's performance reflects a complex, K-shaped dynamic. On one hand, new home sales showed signs of softening earlier this spring, with April's sales volume down around double digits year-over-year due to the bite of elevated mortgage rates. First-time buyers and moderate-income families have felt the squeeze the most, pulling back as financing became prohibitively expensive. Meanwhile, higher-end segments and cash-rich buyers continued to transact aggressively, sometimes benefiting from less competition for properties. This divergence, a tale of two markets, highlights how affordability challenges have locked some aspiring homeowners out even as others thrive, a pattern closely watched by industry analysts and policymakers. There is, however, a growing sense of hope that conditions may soon improve for the broader market. With inflation appearing to cool and the global economy stabilizing, many forecasters predict that by late 2026, mortgage interest rates may begin to inch downward or at least stabilize. Such a shift would be a welcome relief to countless would-be buyers and could unleash a wave of pent-up demand from those who've been patiently waiting on the sidelines. Homebuilders, while cautious, continue to invest in new projects, anticipating that any moderation in borrowing costs will quickly translate into more buyers stepping forward. The housing market's resilience in the face of adversity, powered by fundamental shortages of supply and strong millennial household formation, suggests a vibrant rebound is possible once financial conditions become more favorable, stirring optimism that this current balancing act will give way to renewed growth and opportunity. 4. Global capital flows surge as investors bet on real estate resurgence. Around the world, institutional investors are eagerly redeploying capital into property markets, marking a striking shift from the cautious approach of the past few years. From North America to Asia and the Middle East, billions of dollars are being invested across borders as savvy players sense that now is the time to seize real estate opportunities. In Europe, large private equity funds have ramped up the acquisition of distressed commercial assets at attractive discounts, while in the U.S., major investment firms are raising cavernous funds to snap up undervalued properties. In the developing world, too, sovereign wealth funds and high-net-worth individuals are making headline-grabbing acquisitions of trophy properties in global hubs, underscoring that real estate, as a tangible asset class, remains highly prized for its long-term potential. Surveys of global investor sentiment show a rising optimism about real estate's prospects heading into the late 2020s. Inflation appears to be moderating in many economies, and interest rate stability or even slight declines are expected in the next year, which boosts the appeal of property investments relative to other assets. According to industry research, global real estate transaction volumes are picking up after a lull, with particularly strong interest in sectors like logistics facilities, driven by e-commerce needs, and multifamily housing, driven by urbanization and demographics. Even segments that faced difficulties, such as office towers, are now seeing opportunistic investments aimed at repurposing or repositioning assets for new uses. Capital markets seem to have regained their risk appetite, with large-scale deals closing in places that might have seemed improbable just a year ago. Crucially, this renewed movement of global capital is not just about financial engineering, it is also helping spur development and innovation on the ground. Fresh injections of funds means stalled projects can be revived, new communities can be built, and infrastructure can be improved, often in partnership with local developers and governments. For communities worldwide, the inflow of investment can translate to new jobs in construction and services, as well as the transformation of underutilized areas into vibrant economic zones. There is a growing sense that the world's real estate markets have weathered the storm and are now entering a phase where both investors and the public stand to benefit, a hopeful harbinger of global cooperation and progress through brick-and-mortar endeavors. Subtopic: Middle East boom. Major investor defies tensions with bold Dubai deal. In a notable example of cross-border confidence, Canadian asset management giant Brookfield has doubled down on Dubai real estate, investing heavily in new mega-developments despite regional uncertainties. This high-profile move, coming at a time when geopolitical tensions in the Middle East have given some investors pause, showcases an unwavering long-term outlook. Brookfield's leadership emphasized the Emirates' resilient growth and strategic value, demonstrating how global capital will boldly venture into promising markets even amid short-term clouds. Dubai's government welcomed the partnership, seeing it as validation of the city's status as a safe haven and economic powerhouse. The deal involves billions in planned commercial and residential projects, signaling that international players are eager to claim stakes in the region's future skylines. Brookfield's commitment is one among several such global bets in 2026, and together they reflect how institutional investors are weaving a more interconnected world, one where optimism and opportunity transcend borders to fuel real estate booms. 5. Green mandates and climate-resilient development gain ground in real estate. Facing the realities of climate change, the real estate industry is undergoing an urgent and optimistic transformation toward sustainability and resilience. Across the globe, developers, policymakers, and investors are converging on the idea that buildings of the future must be greener and tougher in the face of extreme weather. New regulations and standards are taking effect. Governments in leading markets have begun requiring higher energy efficiency in buildings, phasing out fossil fuel heating, and encouraging on-site renewable energy generation. This momentum is evident in everything from flood-resistant urban design in coastal areas to wildfire-conscious planning in drought-prone regions, with climate risk now a key consideration for property values and insurance costs. The market is responding enthusiastically. Green building certifications and retrofits have surged, as owners realize sustainable buildings tend to attract premium tenants and can lower operating costs over time. One striking trend is the emergence of green mandates at the city level, where local authorities tie climate action directly to real estate transactions and development. In some pioneering cities, sellers of homes or builders of new projects are required to incorporate climate-friendly upgrades, such as solar panels, energy-efficient appliances, improved insulation, and electric vehicle charging infrastructure, as a condition of sale or permitting. Institutional investors, too, are prioritizing environmental, social, and governance (ESG) factors, channeling capital into projects that meet rigorous sustainability criteria. Funds that invest in renewable energy infrastructure, net-zero office developments, or carbon-neutral housing are attracting immense interest, reflecting a broader shift. Doing right by the planet is increasingly seen as aligned with long-term profitability in real estate. All of these changes are paving the way for a new generation of climate-resilient communities. Architects and engineers are innovating with sustainable materials and designs, from cross-laminated timber high-rises that lock away carbon to smart homes equipped with sensors and AI that optimize energy use in real time. Coastal developments are elevating structures and restoring natural buffers like wetlands to guard against storms, while desert cities invest in cooling architecture and water recycling to endure heat waves. These adaptations not only help safeguard investments, but they also promise better quality of life for residents who benefit from lower utility bills, healthier indoor air, and neighborhoods that can withstand nature's challenges. In the big picture, the push for resilience is a hopeful story. By future-proofing our buildings and infrastructure, we're protecting communities and creating a greener legacy for future generations. A vital step as humanity prepares to face both earthly and even extraterrestrial environments in the centuries to come. Subtopic: Berkeley's bold climate upgrade ordinance sets a new standard. In Berkeley, California, a groundbreaking new ordinance requires that homes meet tough energy efficiency standards before they can be sold, effectively making climate upgrades a standard part of the real estate transaction. Starting this year, homeowners in Berkeley putting their houses on the market must demonstrate building emissions-saving ordinance compliance, which often means installing electric heat pumps, modern insulation, or solar panels to improve the property's carbon footprint. The program aims to slash residential carbon emissions by ensuring that outdated gas furnaces, appliances, and poor insulation are addressed at the point of sale. While some sellers initially expressed concern about the upfront cost of mandated retrofits, city officials and environmental advocates note that these investments raise property values and reduce utility bills, making homes more attractive to buyers. The policy has garnered national attention, with other climate-forward cities studying Berkeley's approach as a blueprint for cutting emissions in the housing sector. In practice, early reports suggest that local contractors and green tech companies have seen a surge in demand for energy audits and retrofits, indicating that the real estate market is adapting. By tying home sales to climate action, Berkeley is effectively saying that move-in ready now means planet-friendly, a bold move that could chart a sustainable path for communities far beyond its borders. 6. PropTech revolution. AI and automation reshape the real estate industry. A digital transformation is sweeping through real estate as artificial intelligence, AI, big data, and automation are changing how properties are built, sold, and managed. In 2026, technology's influence is visible at every step of the real estate life cycle. Smart algorithms now analyze market trends and property values with unprecedented accuracy, helping investors and homebuyers make more informed decisions in seconds. Real estate firms increasingly rely on AI-powered chatbots and virtual agents to handle inquiries around the clock, while machine learning models optimize everything from property pricing to targeted marketing. Remarkably, nearly half of real estate professionals now report using AI tools to draft listings, stage virtual home tours, or even generate property descriptions, a testament to how quickly these innovations have been embraced. The convergence of property and technology, PropTech, is not just about efficiency. It's unleashing creativity and access in ways that promise to benefit both industry insiders and everyday people seeking a place to live or invest. On the construction and development front, automation and advanced construction tech are accelerating the pace of building new homes and commercial spaces. Robotics and 3D printing have moved from pilot projects to full-scale home building. Large machines can now fabricate the walls of a house in a matter of days, reducing labor costs and material waste. Drones and AI-driven inspection software can monitor construction sites in real time, improving safety and quality control. Meanwhile, smart building management systems equipped with Internet of Things, IoT, sensors, and AI are optimizing energy usage, predictive maintenance, and security in modern commercial buildings and apartment complexes. These technologies not only cut costs, but also promote sustainability. Smart thermostats and AI-guided energy systems significantly lower carbon footprints for entire buildings. The result is a creeping revolution where homes and offices are becoming more high-tech, more efficient, and more responsive to their occupants' needs. The PropTech boom is also empowering new solutions to old problems, sparking optimism for the future. Virtual reality property tours allow prospective buyers or tenants to explore spaces on the other side of the world from their living room, broadening access and saving time. Blockchain and smart contracts are beginning to streamline transactions, cutting through paperwork to enable faster, more transparent deals, a topic explored in more detail in another part of this report. There's even a hint of the fantastical, as humanity contemplates living beyond Earth one day. The technologies being honed now, from autonomous construction robots to AI habitat design, are laying the groundwork for building not just smarter cities here on Earth, but perhaps habitats in orbit or on the moon. The human-centric orientation of these innovations remains clear. A tech-driven real estate ecosystem could mean more affordable housing construction, easier transactions, and buildings that better serve their occupants and the planet. In sum, the convergence of real estate and technology is accelerating progress and giving stakeholders reasons to believe that even bolder innovations are on the horizon. Subtopic: Big Bank backs 3D printed homes in groundbreaking partnership. One compelling example of PropTech going mainstream is Wells Fargo's initiative to offer special mortgage incentives for 3D printed homes, a move that effectively puts major bank muscle behind cutting-edge construction technology. The banking giant recently partnered with Icon, a leading 3D printing home builder, to encourage buyers to embrace homes built with giant robotic printers. As part of the program, Wells Fargo is providing discounted interest rates and reduced closing costs for qualified buyers of Icon's printed homes, aiming to jumpstart broader acceptance of these high-tech houses. 3D printing can construct a home's concrete walls layer by layer in mere days, significantly reducing waste and labor requirements. By endorsing this approach, a traditional financial institution is signaling that automated construction methods are no longer experimental curiosities, but viable, bankable solutions to address housing needs. The collaboration hints at a future where homebuyers might routinely choose between a conventionally built house and a robotically printed one, with lenders competing to finance the latter due to its efficiency. It's a milestone that demonstrates the real-world impact of PropTech, once futuristic methods are now tangible, enabling faster, cheaper, and possibly even more sustainable homes. Innovations that could one day scale from earthbound neighborhoods to even more ambitious frontiers. 7. Urban revival, turning empty offices into vibrant downtown housing. As remote work reshapes city landscapes, a silver lining has emerged. An unprecedented wave of office-to-residential conversions is injecting new life into once quiet downtowns. Across many city centers, underutilized office buildings are being transformed into apartments and condos, addressing two challenges at once: filling vacant space and easing housing shortages. The trend is accelerating. New data shows that the pipeline of these conversions has grown sharply, with nearly 100,000 apartment units in the works nationwide via adaptive reuse projects, a 28% jump over last year's count. Major cities like New York, Washington, D.C., Chicago, and Los Angeles are leading the charge, backed by public and private efforts to retrofit aging office towers into modern housing. The once empty lobbies of old financial buildings are gradually welcoming residents with strollers and pets, as downtowns diversify beyond 9 to 5 offices and embrace a 24/7 urban lifestyle again. Government incentives have played a critical role in this urban regeneration movement. Policymakers at the city and state levels are easing zoning laws and offering tax breaks or low-interest financing to encourage conversion projects, recognizing their potential to fight blight and boost housing stock. States like California have passed measures to reduce red tape for converting commercial buildings into apartments, while cities such as Philadelphia and San Francisco are surveying and identifying which vacant properties are best suited for residential reuse. The redevelopment of these structures is not without its challenges. Older office buildings can be costly to retrofit and may require creative architectural solutions, but a growing number of developers are rising to the occasion. By repurposing sturdy old frameworks rather than building new from scratch, these projects are also environmentally friendly, conserving resources and reducing construction waste. For urban communities and businesses, the benefits of this transformation are manifold. Bringing more residents into downtown areas spurs economic activity, supporting local shops, restaurants, and cultural venues, and making city centers livelier and safer. After years of pandemic-era doldrums, many central business districts are gradually rebounding with new housing driving foot traffic at all hours. Young professionals and even downsizing retirees are drawn to these unique residences, which often blend historic architectural charm with modern amenities after conversion. In a sense, cities are reinventing themselves, forging a future where neighborhoods are mixed-use and adaptable, capable of thriving even as work patterns evolve. This adaptability bodes well for the long-term health of urban cores, highlighting humankind's capacity to reimagine and revitalize our built environment instead of letting it decay. A lesson in resourcefulness that echoes our greater aspirations of renewal and colonization in any frontier we explore. Subtopic: Los Angeles high-rise set for conversion into hundreds of new homes. A shining illustration of the office-to-housing trend can be found in Los Angeles, where a prominent 17-story office tower in Westwood is now slated to become a vast residential community. After a $131 million deed-in-lieu transfer of the nearly 250,000-square-foot building, its new owner, local real estate firm Douglas Emmett, filed plans to convert the structure into approximately 200 modern apartments and add a new 7-story residential building on the site's parking area. Together, the project would deliver over 320 new housing units in a high-demand neighborhood, showcasing how a once struggling commercial asset can be reborn to address the city's housing needs. The repurposing effort is emblematic of LA's strategy to meet its lofty state-mandated housing targets by unlocking dead real estate and turning it into livable space. City planners have noted that Los Angeles has tens of millions of square feet of office space potentially suitable for such conversions, and Westwood's transformation could inspire more projects elsewhere in the city. By rewriting the story of a troubled office building into one of housing opportunity, Los Angeles is proving that urban adaptability is more than feasible. It's a key part of building cities that can weather change and continue to provide for their people. 8. Innovative solutions tackle the housing affordability crisis. From coast to coast and around the world, the pressing challenge of housing affordability is spurring a wave of innovation in finance, construction, and policy. With home prices and rents having soared in recent years, 2026 has seen determined efforts by both public institutions and private innovators to make housing more attainable. Policymakers are stepping up. In the U.S., states like California are pushing forward multi-billion-dollar affordable housing bond measures to fund new construction and preserve existing affordable units, while some cities implement or consider rent control tweaks and expanded housing vouchers for struggling tenants. On the national stage, discussions continue around incentivizing development through tax credits and adjusting zoning laws to allow denser, more affordable housing types such as duplexes and accessory dwelling units in traditionally single-family neighborhoods. These moves are meeting the moment. After a period of sharp housing inflation, data suggests that home price growth is moderating, which, combined with rising incomes, could modestly improve affordability in coming years if supply expands. The private sector and nonprofits are also key players in this housing affordability push. Innovators are devising new models of housing production and finance to lower costs. Startups are making headway with modular construction and factory-built homes that can be assembled quickly and cheaply on-site, reducing labor and material expenses. Micro-housing communities and co-living arrangements are being piloted in some urban cores, offering residents a lower-cost entry point into city living with shared amenities and flexible leases. Creative financing platforms have emerged too. For example, some employers are now partnering with fintech companies to help employees save for down payments through payroll deductions and matching programs. Community land trusts and cooperative ownership models are gaining traction, keeping housing permanently affordable by removing the land cost from equation and giving residents a stake. This multi-front attack, technological, financial, and communal, is gradually chipping away at the affordability problem. These collective efforts bring a renewed sense of hope that the seemingly intractable housing affordability crisis can be addressed with ingenuity and collaboration. Early success stories abound. Regions that once struggled to attract investment in affordable housing are now seeing infusion of funds from social impact investors and major banks launching initiatives dedicated to financing below-market rate housing projects. There is also a cultural shift. Housing is increasingly viewed as infrastructure and a human right, galvanizing action from a wide array of stakeholders to think outside the box. The momentum is building, and while the gap remains significant, 2026 may be remembered as an inflection point when widespread commitment to innovative solutions began to turn the tide, fostering a future where safe, decent, affordable housing is a reachable dream for more families around the world. Subtopic: High School Workshop Builds Homes and Hopes in Colorado. In Colorado, one pioneering program called BoulderMod is tackling housing affordability and labor shortages at the same time. By operating a modular home factory on a high school campus and training students to become the next generation of builders. This initiative, a finalist for a prestigious National Housing Innovation Prize, partners a public school with a modular construction venture to produce affordable housing units while giving teenagers hands-on vocational education. Each day, students work alongside professionals and educators, using advanced manufacturing techniques to fabricate housing components in a controlled environment. The modular homes they build are then assembled into real housing for local families, reducing construction costs and time compared to traditional methods. Graduating students emerge with valuable construction skills and often job offers, addressing the industry's shortage of skilled labor. The program's dual impact has impressed many observers. It's a powerful demonstration that with creativity and community collaboration, we can simultaneously invest in our young people and increase the supply of affordable homes. 9. Real estate tokenization goes mainstream, opening markets to the masses. A quiet revolution is underway in property finance. Real estate assets are being tokenized on blockchains, transforming how people invest in properties. By turning ownership stakes in buildings into digital tokens, this innovation allows even small investors to purchase fractions of a property and trade them easily, much like stocks. What started as a niche concept backed by crypto enthusiasts has now grown into a flourishing market worth over $30 billion as of mid-2026, fueled by interest from major financial institutions. Traditional banks and asset managers, including some of the world's largest, have launched pilot programs to tokenize real estate funds and even individual properties, seeing this as a way to unlock liquidity and reach new investors. For example, global firms are issuing tokenized shares of real estate portfolios on public blockchains like Ethereum under regulatory oversight, a seismic convergence of old-school real estate with cutting-edge financial technology. The benefits of real estate tokenization are manifold. Investors gain unprecedented access and flexibility. Someone in one country can invest a few $100s to own a slice of a prime office tower in another country, which would have been impossible before. These tokens can often be traded 24/7 on digital marketplaces, potentially bringing liquidity to a traditionally illiquid asset class. Developers and property owners can tap into a broader pool of capital, raising funds more quickly by appealing directly to individual investors globally, rather than relying solely on big institutions or banks. There's also excitement about the efficiency gains. Smart contracts can automate the execution of property transactions, distributions of rental income, and transfers of ownership, which might reduce legal costs and friction in the buying/selling process. Importantly, mainstream adoption is accelerating as regulatory clarity improves. Governments and financial regulators in several countries have begun crafting rules for security tokens, giving large investors the confidence to participate in this emerging market. Forecasters predict that by the end of the decade, tokenized real estate could swell into a multi-trillion-dollar segment of the industry, fundamentally broadening the investor base for property assets. This trend hints at a more democratized future of real estate investment, where owning a piece of a skyscraper is as simple as clicking a button on a smartphone app. Just as technology is connecting people across continents in social and economic ways, it's also ensuring that the wealth creation potential of real estate can extend beyond the few to the many. leveraging innovation to break down barriers that once kept ordinary people on the sidelines of the property market. Subtopic: Landmark buildings sold by the square foot as digital tokens. In a sign of how real estate tokenization is moving from concept to concrete reality, a historic Manhattan skyscraper recently became one of the first major properties to be fractionally sold via digital tokens. The building's owner, partnering with a fintech platform, issued thousands of blockchain-based tokens, each representing a small ownership stake in the property. Investors worldwide rushed to purchase these tokens, attracted by the opportunity to own part of a famous New York City asset and potentially earn a share of its rental income. The token sale raised tens of millions of dollars in record time, all under regulatory approval, demonstrating that even marquee properties can be financed by crowds of everyday investors alongside traditional funding. Participants can later trade their property tokens on a regulated exchange-like marketplace, bringing liquidity and price discovery to a realm once dominated by private deals. This unprecedented deal is being hailed as a blueprint for future transactions, showing how technology can open elite real estate markets to a broader population. As similar offerings spring up from London to Singapore, the century-old model of property ownership is evolving, proving that innovation can break down long-standing barriers and invite more people to share in real estate's growth, even as we dream of expanding into realms beyond our home planet. 10. Space. The final real estate frontier beckons. In a development that reads like science fiction but is edging closer to reality, the concept of real estate beyond Earth is moving from imaginative daydream to strategic planning. The rapid growth of the space economy, with more frequent rocket launches, commercial space stations on the horizon, and talks of lunar bases, has led futurists and companies alike to contemplate the practical aspects of building and owning property in space. Private spaceflight companies have floated plans for orbital habitats and even space tourism facilities, raising novel questions about property rights and development in zero gravity. Visionary architects and engineers around the world are sketching designs for lunar colonies and Mars habitats, developing new construction techniques that could deploy local materials like moon dust or Martian soil to build structures. While these scenarios remain years or decades away, the preparatory work is well underway, and it has important implications for how we think about construction and sustainability here on Earth. One near-term outgrowth of this space real estate movement is the creation of infrastructure to support space enterprises right here on the ground. Regions with space launch facilities are experiencing their own property booms as companies scramble for office parks, assembly facilities, and worker housing near spaceports. In the United States, for example, Florida's Space Coast and Texas's Starbase region have seen surging demand for commercial real estate thanks to the influx of space industry firms. Even NASA is getting directly involved in real estate endeavors. It has begun leasing large tracts of land around its installations to private companies to create space technology campuses. The blending of aerospace and real estate is opening a new niche sector, from spaceport-adjacent developments to proposals for dedicated space cities to serve the industry's needs. Traditional real estate players are partnering with space companies to give shape to these dreams. As humankind pushes to explore and potentially inhabit new worlds, the cross-pollination of space technology and advanced construction will benefit communities on Earth as well. The extreme challenges of building in space, where materials must be ultra-efficient, structures self-sufficient, and designs thoroughly resilient, drive innovation that can translate into better building practices back home. For instance, closed-loop life support systems devised for space habitats could inspire greener, self-sustaining buildings on Earth. The aspirational drive to extend human presence into orbit and beyond is already inspiring young engineers and investors, symbolizing a hopeful future where boundaries are meant to be crossed. While a real estate boom on Mars is not around the corner just yet, the mere pursuit of these cosmic ambitions fuels progress and optimism, reminding us that our capacity for problem-solving and expansion is as limitless as the universe we look up to. Subtopic: Spaceport real estate. NASA opens land for a private space campus. The fusion of space exploration and real estate is vividly illustrated in Houston, Texas, where NASA has opened 184 acres of land near its Johnson Space Center for lease to commercial tenants. In a project dubbed Exploration Park, the space agency is inviting aerospace companies, research institutions, and support industries to set up facilities on its surplus campus property. By carving the land into parcels and offering long-term ground leases at competitive rates, NASA aims to create a thriving hub for space-related business activity. The site will accommodate high-tech offices, manufacturing plants for spacecraft components, research labs, and more, everything except housing, effectively establishing a space industry business park adjacent to NASA's own mission control. JLL, a major commercial real estate firm, has been engaged to market and manage the leasing, highlighting how seamlessly traditional real estate expertise is being applied to futuristic endeavors. Proposals from private firms are already pouring in, and a nearby university's new space institute is under construction, promising a pipeline of talent and innovation. This project marks a significant threshold. Even our public space agencies are now in the land development game, forging partnerships that set the stage for a cosmic economy and proving that space is not the limit, but the next frontier for real estate growth. Video description: YouTube-style dive into this comprehensive June 1st, 2026 real estate market report where we unpack 10 major stories reshaping the property world right now. From Warren Buffett's bold $6.8 billion homebuilder buyout signaling a housing rebound, to an unprecedented $69 billion merger creating a rental empire, to cutting-edge prop-tech innovations like AI and 3D printed homes. This deep dive covers it all. We explore global capital surging back into real estate, new climate-conscious building mandates, office towers turning into apartments, creative solutions to the housing affordability crisis, the rise of blockchain-based real estate investment, and even a glimpse into space as the next real estate frontier. Don't miss these trend-setting updates and the optimistic insights on how they might shape our future homes and cities. Video tags: Real Estate 2026, Housing Market, Real Estate News, Housing Trends, Stock Market, Real Estate Investing, Berkshire Hathaway, Housing Market Recovery, Mortgage Rates, Interest Rates, Home Buyer Tips, REIT Merger, Rental Market, PropTech, Real Estate Technology, AI in Real Estate, 3D Printed Homes, Sustainable Development, Green Building, Climate Resilient Housing, Urban Renewal, Office Conversion, Affordable Housing, Housing Innovation, Real Estate Tokenization, Blockchain Real Estate, Fractional Ownership, Space Real Estate, Space Economy, Future of Housing, Futuristic Cities, Global Real Estate, Economic Trends, Housing Bubble, Market Trends 2026, Real Estate Forecast. Thumbnail concepts. Base thumbnail: image of a futuristic city skyline with tall modern skyscrapers and a rising stock chart or arrow overlay, suggesting growth. The title, Real Estate Market Boom, appears in bold, eye-catching font across the scene, with a subtle overlay of a house icon and planet Earth in the background to hint at global and futuristic themes. Variant A, financial focus: a close-up of a house's for sale sign with a large green upward arrow and dollar symbols, set against a backdrop of city skyscrapers. The headline